Today we shall pass on to the next problem from the exercise under chapter number 7, that is problem number 12. It is a different problem. Listen carefully. Though the number of entries are only 3, there are 3 journal entries only, but you should listen very carefully to fill up the figures for those journal entries. That is 12. Journal entries in the books of Nitya Textiles Limited, Nitya Textiles Limited, Nitya Textiles Limited, journal entries, here as usual for the journal, date, particulars, ledger folio, debit, credit, date, particulars, ledger folio, debit, credit. Rupees 5, rupees 5. Okay. Here, past journal entries for feature and reissue. Question number 12. What should be the journal entry for feature? Share capital account, debtor. Share capital account, debtor. 2. For what the amount was not paid. 8. Called on which Mayuri had paid application and allotment money rupees 6 per share. Rupees 8 was called. Therefore, application money and allotment money only paid, that is rupees 6. Listen carefully here. Total share value rupees 10. Share value paid up 8. Paid up 8 and this is even called up. Paid up only 6. For this, we should pass journal entries. There are 100 shares for this, but we issued shares only 75. Reissued shares only 75 at the rate of rupees 7. Rupees 7. This is the particulars given in problem number 12. So from this you should understand a few things. What are they? It is not a straight question. You should think and do. Here, total share value rupees 10, but the shareholders are called to pay rupees 8, but the shareholders paid only application money and allotment money on the whole rupees 6. So this called up amount should be taken into account. This is very important. So called 8 rupees only. So it is treated as first call. So share first call account. It must be 6. Out of this called up 8, paid rupees 6. That means that the paid up amount includes application and allotment. What about the remaining 2 rupees? The 2 rupees must be the first call money. So that 2 rupees was not paid. Therefore, share first call account. And as usual, to forfeited share account. Forfeited share account. Narration. Shares forfeited or 100 shares forfeited for non-payment of 100 shares forfeited for non-payment of first call. This is the journal entry. For this, how to fill up? In the previous problem, we filled up the share capital account by taking the share actual value 10. Therefore, 10 into 100, 1000 rupees we filled up. But here, there is additional item given here, called up. But out of 10, called up is only 8. Therefore, this amount only should be taken into account. Actual share value 10 ரூபாயா இருந்தால் கூட 10 rupees இருந்தால் கூட company call பண்ணது 8. அந்த call பண்ண 8ல 6 rupees pay பண்ணிருக்காங்க, 2 rupees they did not pay. That is first call. So 8 into 100, 800 rupees. But first call money, what it was not paid, 2 into 100, 200. Therefore, forfeited share 600. This is must be very careful. Then this is for forfeited. Then what about the reissued shares? What is the journal entry for reissue? This is first journal entry, then second journal entry. For reissue, bank account data, forfeited share account data, account data, 2 share capital account, share capital account. How many shares are reissued? This is for reissue. First one for forfeiture, second one for reissue. How many shares were reissued? 75 shares reissued. 75 shares reissued at the rate of rupees 7. At the rate of rupees 7. So 7 into 75. 7 into 75. How much it is? 7 into 75. This is 7 into 75. 525. But the same for the same 75 shares, the called up amount is 8 rupees. 8 into 75, this is 8 into 75, 600 rupees. 600 rupees. Therefore, the forfeited share account will be 75. Forfeited share account will be 75. Then, the third journal entry. The third journal entry. Profit or gain on reissue. For this, what we should write? Forfeited share account debtor. Debtor to capital reserve account. Forfeited share account debtor to capital reserve account. Narration: profit on reissue or gain on reissue. Gain on reissue. What is the gain on reissue? The gain on reissue we should find very carefully. This 75 shares were issued at the rate of 7,525. For the same 75 shares, the amount pending is at the rate of 2 into 75, 150. So 375 rupees as a gain. 375 rupees as a gain. 375 rupees as a gain. Okay, once again, listen how I have answered this, and we are going to see illustration 12 also now with the same journal entries and what I am going to do now continuously. This is 12th problem from the exercise. What is that? 100 shares were issued at the rate of rupees 10 by Nitya Textiles Limited. But the called up amount is only 8. Paid up amount only 6. This is the history for the first journal entry. How to write the first journal entry? This journal entry for forfeiture. What is forfeiture? Share forfeiture journal entry. Share capital account data to for what stage the amount was not paid. Share first call. How do we find the share first call? Is there anything given in the question? If you go through the question, you will not find any such terms there. What it is? Nitya Textiles Limited forfeited 100 shares of rupees 10 each, out of which 8 corner, on which Mayuri had paid application and allotment money rupees 6 per share. From this you should interpret what? Called up the amount 8 rupees, amount called 8 rupees, but paid up 6. How this 6 is paid? In the name of application and allotment, and the balance, that is remaining 2 rupees, must be the first call, because the total value 10, the remaining 2 rupees may be the final call. You should remember. So out of this 8 rupees, 6 rupees has been paid in the name of application and allotment. Then automatically the remaining 2 rupees out of this called 8 must be the first call. That is why I have written to share first call account. 100 shares, 100 into 2, 200. And therefore the balancing figure must be under forfeited share account, that is 600 rupees. So 100 shares forfeited for non-payment of first call. Okay, the forfeiture is over. Now we are coming to the next stage. What you are asked to pass? Pass journal entries for forfeiture and reissue. For forfeiture we have passed entry. For reissue, I said that there are 2 entries. For feature only 1, but for reissue there are 2 entries. Why? For reissue one journal entry and another journal entry, there must be some amount of profit, and for that profit we should pass another journal entry. So for feature only 1 entry, whereas for reissue there are 2 entries. Sometimes I told you in the other class itself, if pass entries for feature and reissue, you should pass all the 3 entries. Now we are coming to the reissue points. So how many out of those 100 shares? Only 75 shares were reissued. At what rate? At rupees 7. So here for feature, share capital account on the debit. For reissue, the share capital account on the credit. You should note it. This is share capital account on the debit. Here the same share capital account on the credit. Since it is reissued, திரும்ப issue பண்றாங்க, then automatically the company will receive the amount. Therefore, bank account debtor, bank will be the receiver, debit the receiver rule. What you have studied in 11th standard, bank account debtor. How much is the amount, how much the bank received? At the rate of 7 rupees, 7 into 75, 525 rupees the bank received. But what is the called out amount? At the rate of 8 rupees, therefore 8 into 75, 600. And therefore the balancing figure for the debit should be written under the account, the forfeited share account. Forfeited share account is 75. Now the gain, there may be some changes in this. Here if it is first call, share first call account. If it is share first and final call, combined together, share first and final call. If it is given they are separately, share first call account, again one more entry to share final call account. If the allotment money is also not paid, to share allotment account, to share first call account, to share final call account, we should write. But in this forfeiture, only this debit share capital and the credit forfeited share, only are permanent entries. Here it depends upon the problem. What instruction is given, we should look at and write it there. Path எழுதணும். Path எழுதணும். இது வந்து important. ஞாபகம் வச்சுக்கோ. What are the items necessary, we should pass. Then we shall come here for this. What is there actually? bank account debtor, this share capital will come here to the credit. Since the amount is received by the company, therefore bank account debtor. Just now I said the share capital only 75 shares were reissued, not all the 100 shares. 75 shares were reissued. Therefore 75 into 8 rupees, 600 rupees we should fill out. But to the bank, how much the bank will receive? 7 into 75, 525. Therefore the balancing figure 75 must be the forfeited share account. So the next one, this is a permanent entry. Whenever there is a forfeiture and reissue, whenever there is a reissue, this is the permanent journal entry. You can write, this is the journal entry for all the problems. What it is? Forfeiture, share account, debtor to capital reserve account. Narration is also the same. Gain on reissue or profit on reissue, the same thing. How to find the profit or gain? See, how many shares are reissued? 75 shares. For how much? 525 rupees. But why those 75 shares are, of course 100 shares are forfeited, but we are 75 shares only we are discussing because 75 shares only are reissued. Okay, but because of what those 75 shares were reissued? எதனால அந்த 75 shares reissue பண்ணாங்க? Because for the non-payment of 2 rupees as first call, those shares were forfeited. So this is 75 into 2, 150 rupees. This is pending. வர வேண்டிய amount of the 75 shares 150 rupees. But because of reissue, திரும்ப reissue பண்ணதுனால the company received 525 rupees. So how much the company get more? So how much? 375. This is the profit that what I have written. Okay, you should be very careful in it. This is the special type of problem because here not simply the paid up amount given or the original value given. Both are given. Sometimes when you go through the problem, you may get confused by reading the statement. Only if you are clear, you can attempt this problem. But it is an important problem. But bear it in mind. See the video again and again whenever you find the time and make it thorough with you. Especially I tell you the toppers, the brilliant boys, those who are very much interested in scoring the center, you should go through the video again and again. And you can capture the point what I said for it. Now, the same modern problem, but it is illustration 12. This is illustration 12, and it is given in the book itself. The answers are given. But you may not be knowing how the figures are filled up. So I am trying now to explain how the amount is got there. The same journal entry, while Gemini Limited forfeited 20 equity shares. In the books of Gemini Limited, journal entries. Okay. Here, equity shares it is given. Therefore, you can put EQ, equity share capital account, equity share first call account, vacant rights. Okay, how many shares are issued by the company? 20 shares. 20 shares. This nominal value, share value, rupees 10, but called up is only 7. Called up 7. And Mahesh had paid application and allotment money rupees 5. Paid up in the name of application and allotment, rupees 5 only. So the company called the shareholders to pay 7, but what the shareholders did, the shareholders paid application money and allotment money totally 5 rupees. But what about remaining 2? It is not paid up, that is unpaid amount 2 rupees. This should be taken as first call, because the total share value 10 called up 7 only, and therefore remaining 3 will be the second and final call. So within this 7, application and allotment money 5 and first call rupees 2. That first call money is only not paid. Here, to fill up the share capital account, what should be taken, whether the share value or called up value. In the last problem itself I told you, when the called up value is given, you should take only the called up value. Therefore, 7 into 20, that is 20 into 7, it must be 140 rupees here. If the called up value is not given, 20 into total share value 10, 200 you should write. But here, what is the first call money that was not received? 2 rupees, 2 into the number of shares 20, 2 into 20, 40 rupees was not received by the company. So what is the balancing figure for credit? It is 100. So this is how you should fill up. To forfeited share account 100. Out of these 20 shares, 15 shares only were reissued at the rate of 6 per share. 6 per share. So 6 into 15, bank 90 rupees will come. For the same 15 shares, the share capital account will be 15 into 7, 7 into 15, 105. I just now said that to fill up the share capital account, we should consider only called up amount when share value and called up are given. Only this is given, you can take this. Only this is given, you can consider this. If both are given, you should consider only called up. So 7 into 15, 105 rupees. This is, therefore, the balancing figure, forfeited share account will be 15. Forfeited share account will be 15. 15 shares forfeited at the rate of rupees 6. At the rate of rupees 6. Then what should be the gain there? 15 shares were issued at the rate of rupees 6, that is 90 rupees. For the same 15 shares, what is the unpaid amount? 2 into 15, 30 rupees. Therefore, the profit will be 60. For the 15 shares, the reissued amount will be 90. This is what is received by the company. Therefore, bank account data. But for the same 15 shares, what is the unpaid first call money at the rate of rupees 2? 15 into 2, 30. This is the pending amount. This is the amount received. This is the pending amount. How much is the profit? This reissue பண்ணனால கிடைச்ச amount. இது ஏற்கனவே பெண்டிங்ல இருக்கிற amount. அப்ப how much is excess? 60 rupees. That should be the profit here. We should write 60. This is the journal entry for illustration 12. you may get some confusion. That is why I have taken this to explain.